Hi everyone, I'm Dan and welcome to episode 7, and this is going to be a review on Aemetis, ticker AMTX, and at the point of recording this video, the current aftermarket share price is $12.10. And if you check in the comment section, you can jump to any key section that you might be interested in. And if sometimes like me, you've got the attention span of a child after eating 15 tubes of Smarties, then maybe just skip to the what am I going to do section. But if you are going to do that, please can you make sure you hit that subscribe button, as it helps me grow the channel and bring you more and more content. So let's get straight into it with what do they do? So the first place to go and check out what a company does is their own website. And it says here, Aemetis were founded in 2006 and operates a 60 million gallon per year capacity ethanol and animal feed production facility in Keys, California. Aemetis also owns and operates a 50 million gallon per year capacity renewable chemical and advanced fuel production facility on the east coast of India. So in short, Aemetis makes ethanol and biodiesel across 2 locations in the world. The biofuel/ethanol production that they've got in California, the company estimates is negative 350 carbon intensity, which means that straight away there's a nice renewable energy spin to this company. Eric McAfee, who's the company CEO, also claims that Aemetis is the largest producer of hand sanitizer in the western United States, and in one of his most recent investor presentation describes the company as being in a castle with a 2,000 mile moat because there's no other companies that can compete with them within a 2,000 mile radius. And Eric also explained that 25% of the methane emissions in California also come from farms. So instantly you can see that what they do has a real impact on the environment. They're essentially taking waste stock, converting it into renewable energy sources. Now it's important to note that being in California has multiple benefits. It's one of the most forward-thinking states in the USA. The climate allows for a lot of farming. The government are heavily supportive of developing companies that are able to manufacture renewable energy sources. And personally, I look at California as a hub for global development of these type of companies. When you look at Tesla and a lot of other companies that have come out of California and then subsequently gone on to change the world. So just to understand a little bit more about the company and where they're currently at, let's just jump over to Simply Wall Street and have a look at their number of employees too. So as we can see as I scroll across, there's been an increase nearly every single year, apart from 1 year in 2018 where it dropped by 3, but it's subsequently picked back up and they're now sitting at 160 employees. And I'd expect to see in the next report that the number of employees they've got has grown. The company also has an aggressive roadmap to make other chemicals available, and they are currently investing in the capital equipment required to enable that roadmap, which will be something we consider later on in the bull and bear case. So now we know that Aemetis are in the renewable energy sector, let's go and have a look into their financials, because that will ultimately help us understand whether or not this is a company you would want to put your hard-earned money into. And it should also help determine what percentage of your portfolio you should consider investing if you do invest. So just jumping back over to Simply Wall Street, we're going to have a look at debt to equity history and analysis. So you can see here it's not trending positively. So if we scroll down as well, it also says here that AMTX has negative shareholder equity, which is a more serious situation than a high level of debt. And then if we look at the balance sheet here, it shows debt at around $260 million US dollars, with physical assets only registering at $106 million. So to be in a position where you have negative shareholder equity, it basically means that your liabilities outweigh your assets. However, and the reason why most of you subscribe is because I go deeper into the detail to find out exactly what's going on. So I've looked much further into these finances to try and understand exactly what is happening with the company. So let's go through a few key points which I think you should balance off against the level of debt when deciding whether or not you want to invest in AMTX. The first point that I want to highlight is the fact that they're in California is really helping them in enabling them to get grants. So on the 20th of November 2020, Aemetis Biogas was awarded a $7.8 million grant for Phase 2 of their renewable natural gas dairy digester project. So whilst it's clear to me that Aemetis have a lot of debt, I'm also able to see that they do have government backing, and it's backed up further by this press release from the 25th of January 21, which highlights that Aemetis were announced a further $16.8 million in grant funding. There is clearly an appetite here from government bodies in the United States to help develop renewable energy sources. Now, although it's not financial, I do believe that the political landscape in the United States has a massive impact on how these kind of companies can grow. What we can see here is that Tom Vilsack was the Agricultural Secretary 4 years ago before the Trump administration. And during his service, he was keen to tackle climate change. And now he's back, it says here, it's his go-to opener. So one of the things that stood out to me from the company presentations was that Aemetis have a long-term roadmap to help sustainably control forestation and the risk of wildfires that come with it, which we know from recent times has severely impacted the state of California. And as always, I'll put all these links into the comments section so you can go and read them in a bit more detail at your own leisure. Further to getting grants from the California government, We can see here in point 5, the company plans to use proceeds from the issuance of the EB5 notes to replace higher rate senior lender funding, which is expected to result in significant interest rate savings. So they are taking an active approach to managing their debt. And if we just pop up to the line above, a key point to note here is that management continues to be focused on growing the business whilst avoiding shareholder dilution. So before we go on to look at shareholders, let's just quickly have a look at the growth and understand exactly what's going on over the next few years, which may help you make a decision on whether you invest or not in this company. If you've previously been interested in investing in Aemetis, you may have recently seen a press release that claimed the company will be turning over $1 billion by 2025. Now we'll just take a look at their company presentation and just understand exactly how they aim to get there. So if we look at 2025 in this column here, we can see that California ethanol will have only increased ever so slightly over that time. The company expects to have quite significant growth in the India biodiesel. Dairy renewable gas seeing an increase from $8.9 million up to 175, and then jet/diesel with below zero carbon intensity hydrogen going from $2.6 million all the way up to 467.1. So it's pretty clear that if you are going to invest, you need to keep an eye on what's happening with their dairy renewable gas and their jet and diesel fuel, because ultimately these are the two revenue streams that will make or break the company. From the research I've conducted so far, it's clear to me that the company likes to reinvest, and this stacks up with this slide here, which essentially maps out the roadmap for how they're going to go from 238 million revenues up to 1.07 billion, which represents a 35% compound annual growth rate. And the company are expecting to continually reinvest any profit, any money made into the business to keep growing and keep giving shareholders value. So all in all, it's a very nice roadmap to look at, and if they're able to execute on what they're projecting, this could be a superstar company for the future. However, with that in mind, just looking at their SEC filing, it does say here we may be unable to execute our business plan. And as a result of that, there is a going concern statement in here, which I think is always worth pointing out, because essentially it does heighten the risk that there could be some shareholder dilution in the future. But I think we need to take a second and try and be positive about this company. If they are able to execute all their plans, it could end up being a dividend paying company, and you'd be buying in right now at a relatively low amount. One of the things that really caught my eye was their EBITDA from waste biofuels, which they're forecasting to be as high as 66%. And it's that high because essentially they get the product for free. They've already invested in the capex and all they've got to do is transport. So if they are able to get this right, there really is a lot of potential for this company to do well in the future. So I mentioned shareholders quite a few times in the finance section. So let's go and have a look now at what the share structure looks like, what the float size is, and whether there is any insider buys or sells, which could help us to make an investment decision on the business. So the first thing I want to check out is the float size, and whether you take the Yahoo Finance number or the FinViz number, it's still incredibly low, anywhere between 13 and 20 million. In terms of ownership breakdown, we can see here that institutions have 12.6%, hedge funds 14.7%, insiders 23%, and the general public have nearly 50%. Looking at the total amount of shares, it's an incredibly low number, which could mean that the stock is highly volatile, meaning that on the back of good or bad news, it could shoot up or down very, very quickly. So whilst we've quickly identified there's not that many shares available, let's have a look who owns the ones that are available. So the first name that attracts me here is the Vanguard Group, who have around a 6 trillion portfolio. And scrolling through the names, you can see a lot of other well-recognised investment firms, with Citadel owning around 59,000 shares, an extremely low amount for an investment company like Citadel. So you can imagine if any one of these investment firms here wanted to significantly increase their holding, it would cause the share price to go up dramatically, which represents good value for you as investors right now. The final thing I like to look at on the share structure is the insider trading volume. And it says on Simply Wall Street, hasn't been any shares bought or sold. But I always check the SEC filings to make sure that this is up to date and accurate. Interestingly, here on the SEC site, we can actually see that there's been a recent number of security sales and purchase records. We can see that shareholders inside the company are buying. They're just buying B series stock, which is a different type of stock that we have access to as retail investors. Typically, we're able to trade on Series A stock. So now we understand a little bit about what the company does, their financials, the shareholder structure. Let's look at the bull case and understand what positives there are that could act as a catalyst for the price going up in the future. In the interest of saving you time, it's safe to assume anything that I've already presented so far in the video that's positive is part of the bull case. Things such as the positive financial projections they have, the fact that insiders are willing to buy into the business still, they have a diverse amount of institutional investment, they've received several grants from the California government, and they're continuing to raise capital, which shows that investors believe in the strategic direction of the business. All those things aside, let's have a look at a few of the key points aside, let's have a look at a few further points which will help strengthen the bull case. So for those of you that have been following Aemetis for quite a while like I have, you may have noticed a press release a while back around Nevo Motors, who are currently in stealth mode and planning to launch in Q1 2021. So we can see here on this release that Nevo Motors signed a strategic agreement with Aemetis to produce low and zero emission heavy duty trucks for a 90 billion annual market, which is an absolutely massive number. And even if Aemetis were only able to seize a small proportion of this market, it would still take them to the next level. Any links reviewed in the making of this video I'll put in the comment section. It's well worth having a deeper dive into this yourself. I personally think it's a very, very exciting proposition. So a further point to consider in the bull case is their revenue to their market cap. If we look here, we can see revenue for 2019 was around 202 million. And if we pop back over to see the latest share price, we can see here that their live market cap is around $265 million US. So what that means is the company's market cap to revenue is currently at a ratio of around 1-to-1. I think a lot of the reasons behind that are due to debt, and I want to see the company get a further grip on the debt. But I think then, if they do, you could expect to see the share price have a 3 or even a 4 at the start of it quite easily. So not only is it a very interesting sector that they're currently operating in, it's been made even more interesting now the fact that Joe Biden is now the US president. And here we are on Joe Biden's website. Politics aside, and whether you're pro-Trump or pro-Biden, it's clear to see that the next 4 years will be pro-green energy, which personally I see as a massive part of the bull case for Aemetis. They'll continue to get further grants, they'll continue to get investment, and when you have that much power and support behind you, it really does help achieving your dreams. The final point that I want to mention here is the fact that they also have a site in India. And despite it being a very turbulent 2020, India is now in an excellent position to go and deliver on their already very, very ambitious renewable energy targets. And if we just read this bit here, it says record low solar tariffs and flexible clean power auctions pushed India's renewable energy growth in the midst of pandemic impacts. So now it's just a question of pace. So as I've said in all my videos so far, it's important that we also look at the bear case and determine what level of investment we make, or if you want to even invest at all. So in the bear case, there's 3 things that I want to focus on. The first point is the amount of capex involved to develop a company like this. And I like to think of the growth curve that they're on like a hill. So essentially they need to get to the top of the hill before they get all the benefits of coming back down on the other side. And it does take a lot of money to get to the top of the hill. Now it looks as though they are raising finance, which will help them to continue to invest, but it's just something to keep an eye on. The second point on the bear case, we're going to go over to LinkedIn and have a look at their CEO. So apart from focusing on my absolutely horrific profile picture where I'm sporting a beautiful pink jumper, let's just take a look at Eric McAfee and what he's previously done in his career. And just to be clear, I'm not being overly critical here, but it's just something that's raised a little bit of a red flag. So if we just scroll down, let's just have a quick look at the companies that he's worked at before. We can see here that Eric was a founder at Pacific Ethanol, which is now listed under the ticker ALTO. Now it could just be a case of him not having a very up-to-date LinkedIn, but at the same time he was also founder and director of Evolution Petroleum. And then during his time at Evolution Petroleum, he was also a founder chairman at Solargen Energy. And then if we scroll up, he's got various other business ventures as well that he's focused on, so McAfee Capital, McAfee Farms. So whilst I'm not actually sure if this is good or bad news, I thought I'd put it into the bear case just to be careful. I think the reality probably is that he's just a very, very well connected man, and he has quite a lot of influence in this space. But again, it's important to understand that people are what makes the business run. So I'll suggest that if you do some extra research in your own time, it may be worth looking into Eric McAfee a little bit further. It may transpire that he's an absolutely critical part of the business, and he is essentially the beating heart of the business, and without him it doesn't operate. Either way, good or bad, it's worth keeping an eye on his movements and see what kind of strategic operations he's got going on in parallel to Aemetis. The third point that I want to focus on is the projections. So hand on heart, I'm not totally convinced that these projections can be achieved. So if you are interested in investing in AMTX, I would just suggest that you scale down these revenues and expectations because they are extremely optimistic. Personally, I think that anywhere between the 15 to 20% compound annual growth rate is much more realistic and achievable. It still gives us a very nice number at the end, but it isn't quite $1 billion. However, that said, I think the share price today at $12.10 is extremely undervalued. So if you were to buy within the $12 to $15 range, I could still see the share price doubling by the end of the year, even if their revenues were to just stay consistent. Because there are other catalysts at play which we've discussed in the bull case, things such as Nevo Motors, something like that could propel the share price massively up. So I'm going to head over now to Trading 212 and take you through some technical analysis, just to understand exactly where the share price is currently at and what could happen in the near future, and where you might be able to get in as an optimal buy position. And in the interest of full disclosure, I do currently own a position in Aemetis, 100 shares which you can see here, which are bought late on Friday. So in terms of the chart setup, I've got the volume, I've got the awesome oscillator, the MACD, and I've also got some support and resistance lines and some trend lines drafted already, along with the EMA 200 and EMA 50 lines here. So the first thing to note here is the share structure has a massive impact on how the share price moves. You can see a huge gap up here from around $4 to $6.70. And if I remember rightly, this was on the back of the 16.8 billion grant funding. It shot up from a previous close of $4.21 up to $11.02. However, after that, it traded within these two zones here, so within the kind of $9.29 zone and $6.70. And it stayed here for quite some time. And then further good news, which I think was around, and then when the company announced that they were aiming for $1 billion revenue by 2025, the share price shot up even further. And the important thing to note here is it doesn't take a massive amount of volume for a stock with a reasonably low float to shoot up incredibly quickly. And even though it rose quite quickly in the middle of a bear market, it's equally retraced just as quick. And I actually think this is a really positive time to enter into this stock. There's been good news and it's surged up, so we can see what the potential is for the upside, but equally it's retraced just because the market is currently experiencing quite a lot of uncertainty and doubt, although I think most of that has now subsided. So based on the charts here, we could see that it could pull back to around $11. However, I'd be surprised if this happens, and I'm firmly expecting that over the next few days we'll see upwards consolidation into the $13.50 range. And if the market is able to remain stable, we could see a breakout post the $13.50 range. The positives for the chart are that it's above the EMA 200 and it's also above the EMA 50, and both are still trending upwards. And the negatives are for the chart that the faster moving line, so the blue line, has crossed over on the MACD and is now trending downwards, which suggests that the price will retrace slightly. The awesome oscillator as well is also trending down with 3 red bars, so at the moment it's saying it's a no buy signal. However, I think most of this has been created by the market conditions that we've faced over the past 3 weeks, hence why I was happy to buy in at $12.46. So in summary, what I'm hoping for here from the chart is upwards consolidation in a more stable market to around the $13.50 range, which may then see some sideways movement before another breakout. So the final point in the process is to say, what am I going to do with the stock? And let's get it added to the tracker and talk through it. So you can see here that I've added Aemetis to the tracker. Ticker is AMTX, they're on the NASDAQ exchange, and it was added on the 7th of March 2021. The price of adding was $12.10 after market price. So then let's get into the financials and what I think is an overall summary. So for the financials, I've scored them a 2 out of 5. And the reason why I've done this is because whilst their roadmap's brilliant and you can see there's a lot of long-term potential there if they're able to execute on their plan, I think they're going to have to raise further capital to enable achieving that dream, which means that their debt will go up and may cause some rocky roads ahead. However, on the plus side, it's clear that they have financial backing from key investors, and I don't think that raising that capital will be a problem. I would have liked to have seen a higher level of revenue, and also I'm a little bit concerned that their total debt is higher than their total assets, which basically means at some point they've made a few mistakes, which hasn't converted spent money into an asset. If we look at growth, I've scored them a 5. It's really clear that the company is going to grow. Whether it grows to the projected volumes or not is another thing. There already is, and there will be, an increasing demand in the future from industry for renewable energy sources. And I also think that we're going to live in a world now where hand sanitizing becomes more and more common. So they're in a very nice position of growth. And it does appear as though the company is quick to react and seize the opportunity when they see it. So I think we will see a great level of growth in the future, and therefore I've scored them a 5. So how attractive is the company to invest in? So outside of the EV market, the green and renewable energy sector is probably the second hottest market going at the moment. We're likely to see a lot of strategic partnerships taking place, and what I think we'll see is the share price continues to rise and rise on the back of good news stories in the media. Globally, there is now a push to become carbon neutral. And quite simply, companies that use inefficient fuels will need to rethink how they operate. These company supply chains will be keen to secure supply from Aemetis. So in terms of risk, I've scored them a 3. In terms of the financials, there is clearly a level of risk there. Also, the roadmap that they're projecting is extremely ambitious. And often investors can panic if a business doesn't hit its projected revenues, which could mean that you see some drops in the share price on the roadmap to 2025. And I think one further thing to mention is there is no guarantee that the hydrogen economy will become a real thing. So therefore, there is a level of speculation in this investment. However, from a personal perspective, I do believe that the hydrogen economy will become a real thing. So in terms of overall rating, I've scored them a 4. This is probably the closest I've come to scoring a company 5 out of 5. But as I mentioned in the bear case, the company is going to need a lot of investment to get over that capex hill. But that said, I think there's so many positive things going for the business. And right now, I think this is still a relatively unknown stock. And if you were to buy in at this position, I think you'll be a happy person in 2 to 3 years' time. So what am I doing? Well, as you can see from the technical analysis section of this presentation, I've already bought, and I may continue to top up further as well. And therefore I've rated it as an action to buy. And the reason why I've bought is because I now feel that the correction is nearly over. And whilst there might be a few days where there's still some unrest in the market, I do think from here we'll see a steady flow of increasing share prices. That wraps this video up. So thank you for taking time out of your day to watch it. And if you did get any value out of it, please hit that subscribe button, as I'll be releasing more videos soon and I don't want you to miss out. So all that's left for me to say is thank you, take care, and happy investing for the week ahead.